Hey everyone, it's Imran from Options Insight, back with another macro options spotlight. Okay, so looking at markets, open week as the bank run concerns obviously kicked in. You had a lot of these regional banks down 50% plus. But then we did have the backstop announced to try and restore a bit of confidence in the banking system. S&P was chopping around, managed to recover from the lows, but finished relatively unched on the day. Tech did rally alongside duration, but Europe got absolutely hammered as those bank credit spreads in Europe did widen out quite significantly. Gold and silver exploded higher as obviously yields collapsed and just general trust in the banking system came into question. But then the kind of more growth sensitive commodities like oil were weaker. That was down nearly 3%. But copper managed to hold the line, staying above that $4 level, which it just doesn't seem like it wants to break for very long these days. Looking at vols, implied vols did spike again. So you can see here, US up a couple of vols in NASDAQ and S&P. Russell was really the big mover, up 5 points, and Europe was up about three to 4 points as well. So some pretty big vol moves there. But obviously we're seeing like over 2 sigma sell-offs in Europe, hence why you're seeing such big vol moves. Looking at commodities, we did see some big moves there as well. 3 vols higher in gold is not a small move at all in gold. Silver, same story. Oil, same story. And even copper was up 2, even though spot didn't move as much. So in general, seeing 2 to 3 vol point increases across a lot of the commodities. In terms of carry, we've got positive carry across the equity space still. So it shows that implieds are moving up at such a fast pace that realized just can't keep up with it. Now, if we were to get some sort of relief rally in markets, then you would see a sharp move to the upside, which would keep that realized vol where it is or even higher. And then implies would get crushed and you would see the carry flip from this positive across the board to be more neutral or even negative. So look out for that. Don't get married to the view that you're just going to get loads of money being short gamma when you're at these inflection points where the markets have been weak, and vols have exploded. Yes, it looks like there's a lot of carry in here, but the first sign of relief, if markets rip 2%, vols get hammered, you're going to see that carry evaporate pretty damn fast. Precious metals, which were in positive carry for quite some time, are all in red. Obviously, big explosion to the upside is going to do that. Silver was up 6% in a day, which is a 3 sigma move, right? Nothing to be sneezed at there. Okay, and then skew-wise, seeing skew generally exploding higher again as well. Some of these percentiles now getting quite... ignore the NASDAQ, that looks like a bad data print there. But in general, skew picking up again. The fear of this kind of downside tail has really come back. A lot of uncertainty now around Fed hikes. Given how much rates are moving, some people are saying they're going to cut. The next move is going to be a cut, not a hike. And then, if inflation print comes out today hot again, then they're going to be talking about hikes again. So very hard to know what's going on with rates, and therefore very hard to know really where the tail risk lies right now. And then in terms of gold and silver, you can see we saw skew here go negative, -2 vols for both gold and silver now, as those upside calls did catch a bid. Okay, looking at some of the sort of charts that stood out to us. The move index really flying back to COVID highs. So you can see here, these are levels that we haven't seen since COVID. And obviously the realized volatility we're seeing in the front end of the yield curve, the 2-year rates. These are moves we haven't seen since the financial crisis, right? A 3-day move in the front end of about 150 basis points is pretty unbelievable. So anyway, not sure what the Fed's going to do. We were pricing 3 or 4 hikes by the end of the year. Now we're potentially talking about cuts. Nomura are talking about cuts. Barclays are potentially talking about cuts. So, and Goldman's are saying they're not going to hike in March. So a lot of banks coming out and changing their view here. The VIX index has flipped as well into backwardation. So you can see here, the green line is what it was yesterday versus an upward sloping contango last Wednesday. So quite a big repricing of the VIX. Slight contango. It can go steeper. It can look like this, but just the way the VIX is trading suggests this is already pricing in quite a lot of fear. Look at the extreme fear reading on the fear and greed indices as well, suggesting that there's a lot of pockets of the market now where things do look quite stretched and quite fearful, which kind of does set us up for some potential relief. Now, is CPI today going to provide that relief? Who knows? I think the market's going to struggle really to know what to do with this CPI number. So it may well be somewhat of a sideshow after the banking story that's kicked off, right? So we'll see. The market's going to try and digest this number and probably chop around a little bit. But personally, I don't feel that it's going to be massively game-changing, given that the bigger story right now is what's going on with the banks. And really, the market's going to care much more about what the banks are doing. And then that yield curve is going to respond to what those banks are doing. Okay. Now, we do think there's some value maybe in picking up some upside or some delta basically in sectors or names that have got decent fundamentals, but are being dragged down by the wider sort of panic in markets. So just, using this broad market weakness to get into stuff that you like. One of our trade ideas is kind of along those lines. We think kind of makes sense. And then crypto markets are quite interesting right now, continuing to decouple from equities. And they had similar moves to precious metals yesterday. So the dynamic of precious metals, flight to quality, that type of thing, crypto catching some of that bid. Still hasn't broken through 25K resistance level yet, Bitcoin, but it's getting very close. And going into the CPI, we are a whisker away from that. So that may well be the final push that Bitcoin needs to get above that 25K area. And if it was to do that, then there's no reason why it can't have some legs up towards 28K. So the fact that it's decoupling from equities and doesn't really care if equities is trading lower, you need to watch out for that. Okay, looking at the trade idea. So we're looking at the energy sector, XLE. And this thing did have a 4% open lower yesterday, but managed to recover from about 2% of that move. But it got a whisker away from this kind of uptrend support that's been in place for the last couple of years. Every time it's kind of tested that, it's done pretty well and bounced off it. So again, looking quite well supported in that around that sort of high 70s, 80 kind of level. Now we've been waiting for this thing, to enter a long position. We've been waiting for it to get close to that support area. So the type of trade we're looking at, we think that even if the oil price breaks down, we think the energy stocks are likely to fare better. That's a typical thing that we saw last year. We believe that will continue as these guys are still making good money. And so if we're going to sell puts, if we're going to sell downside, we're more comfortable selling downside in XLE than we are in the commodity itself. Okay, skew and vol have popped in the latest market moves. So looking at our dashboard, you can see that. Volatility up about 8 points on the week in XLE. So you got that big spike here. Obviously, spot is down here at the lower Bollingers, which is why we've got this bullish risk reversal as our kind of optimal trade on our strategy compass. And then the fact that skew's up here as well. Skew has had a really big move or a decent move up 3 vols here to the top, through the top of the range. So obviously, when you're selling puts and buying calls, that's a nice entry point for you to be selling skew. Okay, we would go to June expiry, give us plenty of time for this thing to kind of finish its sell-off and actually have a meaningful recovery. So we wouldn't go too short-dated like April here. We'd push it further out the curve. And you can see the curve is quite flat as you go along there, basically, right? So if we were to rally and move up into an area where we are long calls, we would think that the vol in June isn't going to collapse too badly, whereas that front end might do. If you look at the carry, it's a positive vol carry right now. Another reason to not be too short-dated, because you might not get your move fast enough, basically. Okay, so that's the general feel from the vol dashboard. All right, that's it for today. Cheers. Thanks for listening. I'll catch you all next time.